Holy smokers, folks, this ain't no dang jokers. This is pretty darn interesting stuff going on here. I was just on the Hungry Bowl app just checking to see how the market closed and whatnot, and I see breaking news. Bankman-Fried, FTX seeking path to buy Robinhood. Now, this is pretty darn intriguing. I want to share something with you here in just a moment, okay? FTX is discussing internally how to buy the app-based brokerage, and Robinhood has not received a formal takeover approach, the report says. Robinhood shares all of a sudden rose like 14% right before the market closed, essentially, right? Declined to common. The company has a market capitalization of nearly $7 billion as of Friday's closing price. Now, that number, remember that number, okay? So basically, if FTX was going to try to buy out Robinhood, I would estimate they would need to pay between $9 billion and $10 billion for the company, in my opinion, okay? Now, FTX did not immediately respond to Reuters' request for comment. Last month, Bankman-Fried had revealed a 7.6% stake in Robinhood, but said he did not have any intention of taking control of the retail trading platform. Wow, man, could things potentially change fast here, right? Robinhood's dual-class shares currently give its founders control of 64% of the voting shares outstanding. So basically what that means is if a deal was presented and the Robinhood founders wanted to take that deal or not take that deal, they could easily outvote everybody else, essentially, because of the way the voting class is set up. So that is just something to keep in mind, that let's say FTX hypothetically offered $10 billion for Robinhood. If the Robinhood founders did not want to essentially take that, they would just vote against it. And it doesn't matter, the rest of the shareholders could, vote for it and it still wouldn't matter. Now, do keep in mind, if you're wondering, that must just be only Robinhood. That's some freak situation. No, actually, a ton of the big tech companies nowadays are set up like that. Not the old school ones that have been around for 20, 30 years, but a lot of the new school ones that have went public in this decade, a lot of them that are set up basically for their founders to have almost all voting control on these companies, essentially. So that is something to keep in mind. Now, the reason this is so intriguing is Robinhood, as of their latest quarter, had well over $6 billion of just cash sitting on their balance sheet. So when you acquire a company, you get whatever's for debts on the company, you get whatever's cash for the company, all those sorts of things, right? And so let's imagine a scenario where FTX, and they try to buy out Robinhood for, let's say, $10 billion, right? Well, they're not really paying $10 billion. They might pay $10 billion and take out the debt for that, but then they get the cash right back for that. So it'd be over $6 billion of basically like a cash infusion, right? Which would be kind of ingenious. Now, once again, the founders of Robinhood might vote against that. They might not want to sell at $10 billion because they believe they're going to be valued at $20 billion or $50 billion or something like that. So this is a very, very intriguing situation. We have to keep an eye on this and see what happens here. So anyway, just want to update you guys on this. Much love as always. I'm going to have a bigger video coming out later today. Peace.